Hi guys, if you are someone that doesn't understand forex basic terms in the market, you will keep blowing an account. I've seen so many buyer and seller or seen so many traders blowing an account not because they are trading with bad strategy, but because they don't understand just simple forex basic terms in the market. If you are someone like that and you want to come out of that problem, make sure you watch this video to the end because in this video I'll be teaching you now, guiding you on how to master forex basic terms for you to take advantage of the market and be a profitable trader. If this is your first time watching video on my channel, don't forget to subscribe and turn on your notification bell so that anytime I upload video, you will not be missing any of my video content. So let's go to the chart and let me be teaching you what is leverage, what is loss size, and what is PIP. How can you use them to be a profitable trader? Let's go and welcome to my chart and let's see, like I told you previously, that we'll be talking about forex basic terms in the markets. You need to understand before you can be thinking of making money in the market, because I've seen so many traders, they are just clicking on buying and selling in the market without them understanding what they are actually doing in the market. And with this, they are not trading with the bad strategy, but at the end of the day, they will still end up blowing up an account. Why? Or maybe the trader someone used to make money, they give them signal, they trade it, and then will lose money with that trade. So why? Is because they don't understand the forex basic time. The first place where I will be starting is from leverage. This leverage is very, very important, and the business there with you. Let me go firstly, what is leverage? Let me ask that question. What is leverage? Because we need to understand what is the meaning of leverage before we can even know how to use it in the market. Like you can see in my definition here, leverage in forex is a loan from a broker that allows a trader to control a much larger position than their initial capital. Is a double-edged sword that amplifies potential profits. Now, what this thing actually mean is that leverage is just a loan. Even if you go to bank, you say you want to leverage, they will tell you that leverage just means a loan. So what do you want to use as collateral or something like that? So leverage is just simply means loan, and this is a loan from a broker in forex trading. Like I always tell people, the reason why me and you were able to be trading in the market is due to this leverage that every brokers introduce. Because normally in the market, before you can trade a minimum lot size in the market, you must have $1,000, which is $1,000 in the market. And between me and you, how many people can afford to fund an account with $1,000 before you can start trading? You know that the answer is very, very slim. Only few people can be able to afford to deposit $1,000 in the market. So this is why broker now come in like, okay, for retail trader to be able to trade with their $50, $100 and above. So how do we come in? Is by leveraging. They leveraging our account. We leverage on them. Them too, they give us chance to, as in, to leverage on them. So, and that's when you set up an account with a broker, either you are using SNES or any broker you are using. After you set up an account, if you want to open your MT5 trading app or MT4 trading app, they will tell you that you should select a broker for that app, because that MT5 or MT4 is what they are going to use to connect you to the forex broker. If you are someone that doesn't understand how this thing work, you can go and watch some of my previous video that I do on introduction to forex trading, so that you can understand what I'm actually talking about. But this leverage is basic time, is a time that forex as a broker they introduce for every retail trader like me and you to be able to trade in the market. If not for this, me and you will need to be depositing at least $1,000 upward before you can be able to trade. Now I will be switching, since we understand what is leverage, and we go to my broker. I will show you a sample of how to, when you see it, you will not be disappointed, and how to select the right leverage on your broker. So in this my own place, let me go to my Chrome. Let me bring up my this thing. This is a broker now. So let me move back to my chart and let's talk about another topic for today. Another topic I have for us for today is lot size. Lot size. So when we are selecting that, when we are saying this thing, what is lot size? Sorry, I don't want to be in capital letter. Lot size. What is lot size? Like I always tell people, this lot size is where a lot of traders are getting a lot of things wrong. Getting a lot of things wrong. This lot size is a size of unit you want to buy in the market. It's a standard unit. There is a standard unit. For instance, let me use land as an example. I'm in Lagos. Only one person cannot come to Lagos and said, I want to buy the whole land in Lagos. It's not possible. You can only select the one you want to buy from Lagos. Maybe one plot, 1 acre, 2 acres, maybe 3 acres, anyone. You just select the size of land you want to buy, not that you want to buy everything. So that's why the way we have it in the market. Like I told you that this market is a market that has been $7 trillion is being traded every day. As it's not possible in the whole world for someone to just pay $7 trillion to the market. Even the richest man in the world does not even value at the $1 trillion yet. So because this market, all the financial institutions they are trading it, all these big men that we know in the market as in the whole world today, they are also a trader. So nobody or one person cannot just come and place a trade of $7 trillion. Where did they want to get the money from? So this lot size is the size of unit that you are buying in the market, and we have this one is a standard unit in the market. It's not negotiable. They have standard of it in the market. We have three different type of lot size. We have uh, we have standard lot size. We have standard lot size. We have standard lot size, and we have mini lot size, and we have micro lot size. So with this one here, mini lot size, micro lot size, and standard lot size, these are the three types of lot size we have in the market, and they have a standard number, just like the way we have 1, 2, 3, 4, 5, 6. You know, those numbers are standard number in the market. So when we are selecting standard lot size, what do we, okay, let me start from micro lot size. When we are selecting micro lot size, what are we going to be having? We are having the lot size of 0.01. This is the minimum lot size you can open in the market. 0.01 is the minimum lot size, and we have 0.02, 0.03, 0.04, 0.05, and so on till we get to 0.09. So when you are using lot size within the range of this 0.01, which is the minimum lot size you can open in the forex market. I don't know about crypto market and I don't know about synthetic market. I'm a forex trader and I can only speak for forex trader. So if you are someone that is looking for synthetic or crypto, you can go and search for it in another video. I don't know about them and I can't do video on them because I don't know anything about them. So the minimum lot size you can use in the market is 0.01, and you can use 0.02, 0.03, 0.04. When you are using this one, we are saying that you are using you are using micro lot size in the market. You are using micro lot size in the market. And when you are using mini lot size, with mini lot size start from where the macro lot size stop. You can see now after 0.09 we have 0.1. So these are the mini lot size: 0.0, 0.1, 0.2, 0.3, 0.4, 0.5 till we get to 0.9. You can see this one is 0.01, 0.1 is the number next after 0.09, and that's where mini losses start. When you are using 0.01, 0.02, 0.03, 0.04, 0.05, you are using what? You are using mini lot size. So what about the standard lot size? Standard lot size also start from where the mini lot size start. You know, after 0.09 we have 1, we have 2, we have 3, we have 4, and we have 5 till we get to 100. 100 is the maximum lot size you can use in forex market. 100 is the maximum lot size you can use in the forex market. So if you are someone that is using 1 lot size, 2 lot size, 3 lot size, 4 lot size, 5 lot size, 200 lot size, you say you are using standard lot size, because this lot size is what everybody always categorize. And now they also have value in the market, because when you have a size, like for instance now, like I told you that if you come to Lagos, you say you want to buy a land, you say you want to buy 1 plot of land, they will give you the price for 1 plot of land. In any location you go to, there is price for everything. So there is always a price you get for this thing, because this is lot size the market is using to pay you. This is lot size the market is using to pay you. As usual, I will start from the micro lot size. So micro lot size, they say if you use 0.01, you tend to be getting $0.1 per pip. When we get to where we calculate pip, I will show us what is called pip. We are moving to that one in the next phase, but just be following me. When you use 0.01, market will be paying you $0.1 per pip. When you use 0.02, market will be paying you $0.2. This is what market will be paying. When you use 0.03, you'll be getting paid over 0.3. When you use 0.04, you'll be getting 0.4. When you use 0.05 lot size, you'll be getting 0.5. See, you get to this 0.09. 0.09, you'll be getting $0.9, which is 90 cents. So these are the standard value for every lot size. The market is telling you that if you use 0.01, you'll be getting $0.1 per pip. If you use 0.02, you'll be getting $0.2 per pip. If you use 0.03, you'll be getting $0.3 per pip. If you use 0.04, you'll be getting $0.4 per pip. If you use 0.05, you'll be getting $0.5 per pip till you get to 0.09, which is the last for micro loss, that you'll be getting $0.9 per pip. So let's move to mini lot size. Like I told you, that mini lot size will start from where the micro lot size stop. After 0.09, what is the next? You'll be getting $1. You'll be getting $2 when you use 0.02. So when you use 0.03, you'll be getting $3. When you use 0.4, you'll be getting $4 per pip. If you use 0.05, you're getting $5 per pip till you get to 0.09, whereby you'll be getting the $9 per pip. So these are the standard value of lot size in the market. And now let's move to the part of them all, which is the standard lot size. So in standard lot size, when you use one standard lot size, which is 1, you'll be getting $10 per pip. If you use 0.2, which is a standard lot size, rather 2 standard lot size, you'll be getting $20 per pip. When you use 3 standard lot size, which is 3 lot size, you'll be getting $30 per pip. When you use 5 lot size, you'll be getting $40 per pip. If you use 5 lot size, you'll be getting $50 per pip until you get to $100. In this $100, you'll be getting $1,000 per pip. You can see the highest the lot size, the highest the money. So now, how they calculate it? They do not calculate it whether the market is against you or in your favor. When the market is against you, this is how this is what they will still be using to know how much they are going to take away from your account. They will say, okay, which lot size do you use and how many pips do you use that as your stop loss. Now when they will now calculate it, the value of the lot size with the pip the market move before they know how much they are going to remove from your account. And if it's in profit in your favor, they will look at the lot size that you use and how much, what is the dollar value for that lot size, which is, if you use 0.1, that's $1. They will say, okay, $1 times how many pip that the market move in your favor. So they will multiply it by $1. If it's 50 pip, they will say, okay, the credit is account with $50. This is how Forex market use lot size. And how to select the right lot size for your account size, I won't lie to you, when we come to the end of this session, I'll be giving you as a bonus. But for now, let's continue to the next one, which we call pip. Which we call pip. So this pip, what is pip? What is pip? Now this pip, it just means like price in point. Price in point. So what is price in point? Now Pip just different mean like the difference in price movement. The difference in price movement. Like we all know that we are trading live market and the price changes every seconds, every minute. Market price is not really fixed at one spot. So and as the price is moving, it's moving in pip. Because in this market, it's not a market where I say, okay, oh, I want to trade with $100. When the market, oh, yeah, give me, when it's times 2 of my money. No. This forex market will be using the loss size and the pip to calculate your money. And what is pip? Pip is the price difference from where you enter the market from. Let me use something as an example for us. In a normal example, if you are trading USD NGN, which is USD fast Naira, you will get to know that the value of Naira in USD currently is about let me say 1,004. Now, this is 1,004 per dollar. Now, if you buy it at 1,004, you should know that the price, the next time you come to the market, the price will not be at the same spot of this 1,004 per dollar. Either the price has come down or the price has gone up. One of the things must happen to it. Forget about this aboki that they have given us round up number. In the forex market, we have kobo. Kobo is also very important, and this kobo means pip in the market. Are you getting my point? So this is how we have it. There is a price point where you enter your trade, either buy or sell trade. There is a price point where you enter the market. So this price point, now the price movement from that price point you enter your trade, either buy or sell, where the market has moved, maybe market move up or market move down. Now they will now calculate like how many, what is the price movement. For instance, if you enter a buy market from 1,004 and price drop to 1,000, 1,350 per dollar. So in the normal market, which is a booking market, they will say, okay, because you buy at 1,350, they will now say, okay, because the price came that definitely you are losing money. They will now say, okay, as you are losing money, how much are you losing? If you buy, let's assume that you buy $1,000 at this rate. You buy $1,000 at this, as in $1,000 at this rate, which means, okay, sorry, not at this rate here. Sorry, 1 minute. Not at this rate. No, at this rate here. You buy at this rate and the price now drop to this level here. So they will now be, okay, no problem. You are losing 50 naira per dollar and you buy $1,000. So how much are you losing then? They will now multiply your $50 by $1,000, which means you are losing 50,000 naira. So the market is against you by 50,000 naira on the market you are buying. So that's how we have it in the forex market too, which is called pip. Are you getting my point? So this pip is where you make an entry from. You will multiply it from the current price. When you are selling, you will multiply the current price from where you enter the market from. That's when you are selling, because when you are selling, you expect the price to be coming down. Or let me put it in a simple way. When you want to calculate pip, whether in your favor or against you, remove least number or the small number from the big number. Whether your entry is a big number or your the current price is a big number, just remove the the smallest number from the biggest number. So whatever it gave you, just know that that's the pip that the market has moved, whether in your favor or against you. For instance, now this one here now, the price is currently at 153.055. As you can see here, this is USD price move one with this current price 153.055. Let me see, 153.055. So with this one here now, you say, oh, okay, no problem. So the market has already done this is the current price. Now let's say price now come down to 151.023. So what you will do in this scenario is to remove this smallest number from this 153, this biggest number. And if you calculate it, let me calculate it from my phone calculator. 153.055 minus 151.023. So the difference is 2.032. Now, this is the difference here. You can also calculate it from your calculator for you to know that we are actually having the same number. So the difference is 2.032. But in the forex market, like I told you that this is a pip. So this last number doesn't have a value. So this doesn't have a value. And this second number, which is starting from 3, is a what? Is unit in the market. While this 0 is standing as a tenth in the market, whereby this 2 is standing as a 100. So when you want to calculate, say, oh, market move what? 203 pip in your favor. 203. If you are selling, the market is moving 203 in your favor. And if you are buying, the market is still moving 203 against you. And that's what they will use now. Okay, what lot size do you use? Let's assume that you use 0.01 lot size, 0.2 lot size to trade. When you use 0.2 lot, and let's say, okay, 0.2, what is the dollar value of 0.2? The dollar value of 0.2 is 0. The dollar value is 0.2. The dollar value of this is 0.02 is $0.2. So if you multiply this is $0.2 by 3203, you will get 0.2 times 203, which means $40. 40.6. So you see now, this is what you do. This is what you get. So if market is moving in your favor, they will add this $40.6 to your account, and is moving against you. You will be removing the $40.6 from your account. This is all about the pip value and pip calculation. So to have a deep value place, I will allow you to, I will encourage you to go on make more research, and in the vision of this class, I might be able to do a deep course on how to calculate your pip value. But we have so many shortcuts, like by using pip calculator. You can go to online. We have so many pip calculator online that you can be using to do it. But in a way whereby you want to be trading and calculate your pip by yourself, you want to know if market is cheating you or market is actually paying you the right money they're supposed to be paying you. So you must know how to calculate this pip. So the next topic, which I think is very important too, I'll be going into is SL and TP. This one is SL and TP. So what is SL? What is SL and TP? Now let me be sincere with you. SL and TP, they are very simple. SL and TP is just like automatic order you give market. Nothing more than that. It's an automatic order that you give market. And we use SL. SL means, sorry, 1 minute. What is SL and TP? So SL and TP, they are something that we are using to as an automatic order we give market to control ourselves. SL just simply means stop loss, and TP means take profit. So you see now, SL means stop loss. Definitely you want to use this SL to to give market automatic order, like, okay, market, when the market is going against me, when it reach this price, please close my trade for me automatically and take my loss. So if you like, be online. If you like, don't be online. If you like, go offline for 1 year. If once market reach that price point where you set your stop loss, the market will hit it and close your trade for you. And TP2 is take profit, like, okay, market, when you are going in my favor, when you reach this place, please take my profit from me and close the trade. It's an automatic order. Once you set it up, and the market, your market doesn't have any option than to do what? That to obey the instruction that you give. Once the price reach your TP, whether you are offline or you are online, but you are not on the MT5 or MT4 app, the market, once the market reach that place where you set your TP, the market will close automatically and add your money to your balance. So it's as simple as that they are automatic order that we have in the market. So the next one that will be giving us to that will be moving us to is currency and currency pair. Currency and currency pair. So I think a lot of people they still don't understand something about currency and currency pair. What is currency? Currency is just a single money. As we explain, currency is just simple money. For instance, we have USD as an example. We have, sorry, let me change it to capital letter. We have USD as an example. We have GBP, GBP as an example. We have JPY as an example. We have CAD, Canadian dollar as an example. We have Euro as an example. So we have so many, even we have NGN, which is Nigerian Naira. So these are the currency in the market, they are currency. But when we're not talking about currency pair, currency pairs. So we are talking about when they already partner pairs together, they partner them together, like they take two pairs, that's what they call it currency pairs. So they take two pairs and pair them together. For instance, we have GBP USD, we have Euro USD, we have USD JPY, we have USD CAD, and so on and so forth. We have so many of them in the market. So now, which one are we trading? We are trading currency pairs. We are not trading this currency, because in a currency, if you are trading $1, which one do you want to be trading? Does it have any value? No. $1 is $1. If you are trading pounds, what value does it have? Nothing, because £1 is £1. Anywhere you find yourself, if you give them £1, they will give you anything value for £1, or they give you your £1 back. The same thing with JPY. One JPY is one JPY. CAD is what? CAD, Canadian dollar. If you like, give them 20,000 Canadian dollar, they will give you something value of 20,000 Canadian dollar. They will not come out. If you want to collect your money, they will still give you your 20,000 Canadian dollar back. So these are the examples. Exactly, naira too. If you give them 1 million naira, they will give you your 1 million naira back, inside in value or in your money back. So nobody will say, because you give them 1 million naira, they should give you 1.2 million naira, or else we invest in a business and a profit. But 1 naira is 1 naira, $1 is $1, £1 is £1, one JPY is one JPY, one CAD is one CAD. But when it now comes to currency pair, this is what we trade in the market, because like I told you that PIB is the calculation of price movement in the market. If price is not moving, how do you want to make money? And what make the price to move is because this £1 is not equal to $1. We all know that pounds is bigger than dollar. Value of £1 is not the same as one value of $1. So, and the value fluctuates every second. The value fluctuates every second. The value of $1 is not as the same as £1. So this value dey fluctuate every time, because what is happening in USD or USA is not the same thing that is happening in the United Kingdom for pounds too. So everybody have their own different strength, and they always compete, they always fight, like which one is stronger, which one is weak. So that's when you see price going up and down, because of what? There is value between £1. £1 is not one USD. £1 is bigger than one USD, and that's what we have as a value. And that value dey fluctuate every time, not because they are fixed, like currency, which is one USD is one USD forever. But when it comes to currency pairs, £1 is not one USD, €1 is not one USD, one USD is not one JPY, $1 is not one Canadian dollar. So they all have their value, and when they have value, the price that is moving dey fluctuate. Like I said, dey fluctuate every second, dey fluctuate every time, and that's when they have value, and that's when we have our trading opportunity, that we are using the opportunity of price movement, the fluctuation of the price between them, to start to trade and make money for our benefit. So I believe this one has been explained deeply, and the next one I will be moving on to is spread. I will be moving to spread. So what is spread? What is spread? What is spread? Spread is very, very simple. Spread is just something that the broker is a commission that the broker is charging on every trade. When you look at your MT5 or MT4, in that MT4 or MT5, you will see something like a bid and ask price. When you see bid and ask price, there's always a little bit different between them, because this price is a price that the forex broker they are selling to you, and where the ask price is a price they are buying from you. So, and the difference between them is what we call spread, which is commission. It's just simple means commission, and this is only thing where brokers are making money from. They are not charging you from leveraging you. They don't have any dividend they are charging you. Apart from this leverage, that's what they charge per every trade you took on their platform. That's the only way they make money. And that's when I always say this spread is one of the very crucial thing in the market. If you don't understand spread, if you don't know how to select the right broker for yourself to be trading, like I said earlier, that not every broker wants to be profitable. Some are clean traders, some are as in traders are working for some. Because when they have very high spread, which means they have high charges on your trade, you you need to recover their money, because immediately you press buy or sell, they already calculated their own commission on it due to the bid and ask price. So when they have high price, you already know that you are the one, you are trading, you are working for them. Let me use something as an example that you can relate with for people that are in Nigeria here. If you go to Aboki that you want to buy dollar, one Aboki over you a dollar for 1,004 and one over you at 1,420, and you want to buy, which one are you buying from? It's not the one that offer you at 1,424 and you leave the one that offer you at 1,420, but you want to sell, you will still look for what the one that is what that is higher, because you also want to make money. So this is how it is in the market too. So everybody bid and ask price, the difference between them is what we call spread, and this spread just simply means the commission that brokers are charging on every trade. So this is the meaning of spread. If you are still also, if you have questions, if you are or you are confused about spread, you can drop it under the comment section, and let me do another video or simple video that will explain it better for you. So the next one I'll be moving to is pending order. Pending order. So we have something we call pending order. After we have automatic order, we have what is called pending order. So what is pending order? And let me add instant execution. What is pending order? What is instant order, instant execution? Let me put it that way, instant execution and pending order. So now, like we already explained, instant execution is a buy and sell order that you enter, or buy and sell instruction you enter, and the broker are filling up your position immediately. That's when if you go to MT5, there is an icon whereby you click on, you bring out buy and sell. Once you click on buy, it's filling your order immediately at the current price. And if you sell, click on sell button, it's filling your order immediately at the current price. But when we talk to pending order, we have different type of pending order in the market. We have different type of pending order. Pending order. So now, firstly, what is pending order? Pending order is an instruction you give to market that, okay, I'm not entering my market now. When market reach so price, please buy for me. When the market reach so price, please sell for me. These are the pending order. Like you gave market pending instruction. Like, okay, when the price do thing, buy for me. When the price reach so price, sell for me. You are giving market pending order. Unlike instant execution that you click on buy and sell and the market is executing your trade immediately. But pending order is when market reach this place, take my buy order or sell order, and if the market did not reach there, market will not fill your order for you. But once the price reach that place, the market will fill your pending order for you. And we have different type of pending order. We have buy limit, we have sell limit, we have buy stop, and we have sell stop. But the only one I will be explaining here is buy limit and sell limit. This buy limit is something we use for a buy order. Now maybe the price is actually going up and we now expect the market to come down, or the price is coming down, but it has not gone to a price point where we expect the market to fall to. We now start depending on that. Okay, we buy limit, please, when the price fall down to this level here, please take my buy order for me, which means this buy limit can only be used or set up on in the market when the current price is above where you want to enter your buy order from, because you all know that you buy low and you sell high. So when market is going down, it has not reached the price point whereby you expect the market to fall to before you enter your buy market. You can set your pending order that, okay, buy limit be here, when the market fall to this place, please take my buy order. Sell limit is when price is actually, maybe price is actually going down or it's coming up, but it has not gone to a level whereby you want to enter sell market from. You can set your sell limit that, okay, when price rise or increase to this level here, please market buy or sell for me. When the market sell, when the price reach there, market will sell for you, and if price did not reach there, market will not take your order, will still be there as a pending order. If you like, let the order be there for more than 20 years. If the price did not get to that place, your order will not be filled up. Your order will not be filled up. So thank you guys, thank you for watching the video from the beginning to the end, and I believe by now you must have understand the basic terms that you need to apply in the market for you to apply your strategy in the right way and be a profitable trader. At least by now you should have understand what is called leverage, lot size, and pip, and how to do those things. So if you still have any question regarding them, drop your question on the comment section. I will pick you up. If you require me to do another video for you to understand it, I will do that. Don't mind, don't worry about that. And if you are someone interested in joining my Telegram channel whereby I give signal, insight, analysis, and trading tips that is going to help you in your trading journey, there is a link in my description box. Click on the link to join my Telegram channel. And at the same time, if you're someone that is interested in trading on my broker platform, this broker is a platform that I've been trading for over 2 years. Like I said, over 2 years, and they are very, very good. They are ready to equip every traders with what they need to be a profitable trader. So the link is also in my description box. Go to there, click on the link, and register for an account and verify and fund it and start trading on their platform. Thank you guys. If you enjoy watching this video, don't forget to subscribe and turn on your notification bell so that you will not be missing video from my channel. The next video is going to be a tutorial about MT5. All these things we learn here, how to apply them on MT5 and how to use them effectively. That will be the next video. Guys, thank you so much guys. See you in my next video.